Welcome to the Daily Business and Finance Show. Apple's plunge and EU fine, Bitcoin's potential retreat and skyrocketing surge, Biden's healthcare task force, New York Community Bancorp stock dive, Ford's impressive U.S. sales amid EV slump, unprecedented tech rally insights from Goldman Sachs, Dow Jones to Nasdaq dips with bullish run on the horizon, and AMD's confidence in GPU, key takeaways from UBS chip meetings. Stay tuned after this short ad break to delve deeper into these captivating headlines. The European Commission has imposed a fine of $1.95 billion on Apple. This penalty is due to what the Commission refers to as abusive App Store rules. These rules are alleged to limit music streaming providers, such as Spotify, from proposing less expensive alternatives outside the app. Apple contests this decision, which precedes new European Union legislation aimed at tech gatekeepers.
JP Morgan has issued a warning that the forthcoming Bitcoin halving event, scheduled for April, could have a detrimental impact on miners' profitability. This is due to an anticipated decrease in rewards coupled with increased production costs. As a result, Bitcoin's value might potentially fall to $42,000, marking a 37% reduction from its present price of $66,600. Following the halving event, it is projected that production costs will rise from $26,500 to $53,000. This could lead to an estimated 20% drop in the Bitcoin network's hash rate. It is predicted that only miners who have access to cheap electricity and efficient equipment will be able to weather the storm, while others may face difficulties.
President Biden is preparing to initiate a federal task force. This team will comprise representatives from the Justice Department, Federal Trade Commission, and Health and Human Services. Their primary objective is to decrease healthcare costs. Initially, their attention will be on drug pricing and health provider expenses. Potential impacts could be felt by companies such as Pfizer, Merck, Eli Lilly, Bristol Myers Squibb, Amgen, Gilead Sciences, United Health Group, and Cigna.
Shares of New York Community Bancorp experienced a 10% drop following credit rating downgrades by Fitch Ratings and Moody's Investor Services. This downgrade was a result of the bank disclosing a significant weakness. Changes in governance and risk management indicate continuous threats to its creditworthiness. The bank might have to raise provisions for credit losses due to the risk associated with office loans, which could affect profitability in 2024.
Electric vehicle manufacturers from China, namely Li Auto, Xpeng, and NIO, experienced significant declines this week. This could potentially be due to disappointing production figures and the aggressive pricing strategy of BYD Company. The electric vehicle sector in the United States didn't fare much better, with Tesla, Lucid Group, Canoo, and Rivian Automotive all suffering losses. On a brighter note, traditional car manufacturers like Ford Motor and General Motors witnessed gains. In fact, Ford reported a 10.5% rise in unit sales year-over-year for the month of February.
Bitcoin's value has soared beyond $65,000, approaching its record peak of $69,000. A 6% growth in the previous 24 hours has elevated its market cap to $1.28 trillion. The upswing is linked to expected demand for exchange-traded funds, triggering a rise in crypto-related stocks such as Bit Digital and Coinbase. Other digital currencies like Ethereum and Cardano have also experienced increases, along with meme coins Dogecoin and Shiba Inu.
Goldman Sachs reports that stocks with extreme valuations are currently at similar levels as they were 2 years ago. The S&P 500 has seen a rise of 7% this year, marking a streak that hasn't been witnessed since the 1970s. However, it's important to note that high valuations are less common now and are primarily found in large growth stocks. While there may be parallels drawn to the tech bubble of the late 90s, the fundamentals of these stocks justify their valuation. In contrast to last year's low cost of capital, which stood at 3.8%, it has now surged to 5.7% due to factors such as inflation and hikes by the Federal Reserve.
On Monday, markets commenced with a downward trend, in spite of the S&P 500's remarkable streak of 16 profitable weeks within the recent span of 18. Jim Reed from Deutsche Bank hints that this pattern might persist. Treasury yields experienced an increase, with the 10-year yield standing at 4.23% and the 2-year yield at 4.59%. The current week anticipates policy verdicts from the European Central Bank along with a testimony from Chairman Powell of Federal Reserve to Congress, which could potentially influence upcoming market fluctuations.
UBS, a renowned investment firm, holds a positive outlook on the semiconductor industry. This optimism is particularly directed towards NVIDIA and AMD due to the potential they present in the realm of artificial intelligence. Both these companies view inference as a crucial component of their AI graphics processing unit market. Currently, demand surpasses supply, with AMD honing its focus on top-tier inference opportunities. The memory market is witnessing substantial improvements which could potentially benefit Micron and Western Digital. UBS analysts also forecast that Apple might successfully introduce its own modem chip by 2025, creating opportunities for Skyworks Solutions. And that's a wrap on the Daily Business and Finance Show. Keep investing in your knowledge. We'll be back tomorrow. Stay savvy, stay informed. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, farewell. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.